Okay, everyone, let's get started with the last section of the cash flow statement, okay, which is the cash flows from finance activities. Okay, so again, this is starting on slide 1635. So again, what the first thing we want to do is we want to look on the balance sheet, okay, and identify changes that are related to finance accounts. Okay, so what would those be? Well, let's go to page 1032. Cash flows from financing would be from issuing your own shares, okay? Issuing bonds, so you sell bonds and you collect the money, or issuing current and non-current liabilities. So maybe you have a note receivable that you've issued to a client, okay, or a customer. Now, what would be a cash outflow? Cash dividends to shareholders, repurchase of shares, so cash that you use to repurchase those shares, cash paid to loans to vendors. Okay, so bank gives you a loan, you pay that back, or withdrawals by the owner. Okay, so we're going to reconstruct those numbers, okay, or reconstruct the changes and report the cash flow effects. So let's look at an example. And this is going to be on the next slide. Ever get this thing to work? Okay, so let's take a look at an example. Now, a review of the common share account, okay, reveals you had that an increase from 80,000 to 95,000. Okay, so your common shares went up. Okay, so think about this: common shares went up 80. Now it's at 95. Oops, that would be the other way around. That's a credit. So again, start with 80. Now you're at 95. Well, how did your common shares go up by $15? Well, you must have sold shares for cash. Debit cash, credit common shares. Now, you'll be given that information as well in the question, okay? But that is usually the reason why it increases. So you would have a cash inflow, cash received from issuing shares. And that'd be 50, so cash coming in. Now, you might have had a situation where you're looking at your retained earnings, okay? So your retained earnings, let's just say, went from 88,000 to 112,000. But so somewhere in there it went up. So let's look at our retained earnings. We have our opening retained earnings. Now you always have to do this calculation. You start with 88. Add in your net income. Okay. Now in this case, the net income was 38,000. Now this would all be given either in a point format, or you would have to look on the income statement. Okay. Now you have your dividends, you don't know. But you end up with 112,000 in ending retained earnings. So as a result, just do the math. Well, your dividends must have been 14,000. Okay. So we would write in our activities, or our finance activities section, cash paid for dividends. That would be minus 14. And then if those were the only two finance activities, then that would be it. You would add them together, and you would have a cash inflow from financing activities of +1. Okay. So again, you just want to look through that balance sheet and look, why did accounts go up or down? Okay, and you're left with, say you had a loan and the loan went down. Well, why would the loan go down? Well, likely you paid off some of the loan, so that would be a finance activity, cash paid for just got to watch as to why those loans went up or down, and you got to be aware, make sure it was for cash. Okay? Because it's also going to tie into your investing section. So you may have bought machinery for $100,000, but you didn't get any cash. Why? Because that would debit. Think about this: debit machinery credit loan payable. Okay, so there's no cash exchange there on the purchase side of things. But as that amount would go down over time, you would say finance activity cash paid for retirement of debt, something along those lines. Okay, so I've assigned a couple questions for you. Take a look at that, compare that to the answer key, and then we'll review those. And please make sure you get me the quizzes that were assigned on Friday. Again, I just can't stress it enough. All I would do is I would go on the balance sheet and subtract my current year from the prior year, and that's a great starting point for the cash flow statement. And then you can just start plugging in your numbers. Okay. That is it for today. We will be in touch tomorrow.